day and welcome to the Human Capital Analytics presentation that was presented at the 2012 Computer Society South Africa Human Capital Strategy Seminar. We know that you're going to find this both interesting and challenging. Business intelligence is pretty pervasive in most organizations today, except in the area of workforce analytics. So, human capital analytics can justifiably be called the last frontier for business intelligence. Before starting, I'd like to ask a few questions. Firstly, what percentage of your total budget is people-related? I expect somewhere between 50 and 70%. But that was easy. Let's give you a more challenging question. What is the value contribution of your workforce to organizational value? Don't know? What about, on what category of employees do you get the highest return on investment? Do you have to guess or do you know? And what about which talent management processes are the most cost-effective and effective? And do you actually manage any of them? And finally, are we improving with any of the above measures, or are we going backwards? Do you know? For now, let's just move on, but we will come back to these. Most organizations today have some form of scorecard that helps them to define, manage, and monitor organizational goals. Some are the balanced scorecard of Kaplan and Norton, and others use some derivative of this. But basically, the scorecard defines the objectives, measures, targets, and initiatives of the organization to achieve goals. And one of the areas that needs to be managed is human capital, lumped under learning and development in the standard balanced scorecard. Can I ask, who here has some sort of scorecard system in place? And is it only at the high level, or is it cascaded down the organization? And if so, to what level? For this presentation, we are focusing on the human capital aspect of the scorecard, and it just might extend beyond learning and development. Right now, the most important workforce measures are headcount, span of control, turnover, staff turnover that is, reason for termination, level of employee engagement, time to fill open positions, the cost of the hire, internal mobility, internal hiring rate. But what do these actually tell us about the workforce? These are really more about the effectiveness of HR and HR processes. They don't tell us much about the workforce itself. Let's have a look at this again to see what I mean by that. Same measures down the left-hand side, but now we have a trumpeter. What is the trumpeter telling us? The trumpeter is telling us that South Africa have scored 58. What does that mean? It's practically meaningless without having additional information. Information such as, what game are we playing? Rugby, basketball, cricket, soccer? For now, let's just say it's cricket. What is the relative score? Well, if I say South Africa 58 for 6 in a limited overs cricket game, does that give you more information? Of course, but still not enough to be able to make any judgment or to make any decisions. Who are our opponents? If we're playing Australia, well, kind of okay. But if we're playing United States at cricket, what else do we need to know? What is the stage of the game? Well, let's say we're in the 27th over of the second inning. Now, that gives us a bit more information to work on and gives us more thought as to how we strategize to the end of this game. Okay, but who's in and who's out? Do we have someone capable of staying in to the end? Very important at this stage if we're looking again at how we strategize to achieve what we need to at the end of the game. But what do we need to achieve? What was the score? What do we have to make? Now do we have enough information to make some decisions? Yes, we do. And management is exactly the same. We need information in order for us to make better decisions and better decisions about our people. To help us, there are these tools now called human capital financial statements. These are the three tools. Don't worry, we'll look at them, each of them separately, so don't try and read what you see here. The three statements are the human capital flow statement, so that tells you how people are moving within and into and out of the organization. Your human capital asset statement, the value of those human capital assets of yours. And the human capital impact statement, similar to the income or based on the information on an income statement, but that tells you what impact your workforce is having on the organization, its effectiveness and its value. We'll look at each of these in a bit more detail. Please don't try and read the details of these next few slides. The details for now are not relevant. Please just look at the areas that I'm going to be highlighting in the red boxes. This is the human capital flow statement. This statement encapsulates the movement of human assets in the organization. Across the top, there's headcount at the start of the period, new hires, turnover or resignations, net promotions, net transfers, and headcount at the end of the period. Down the side are the different categories of staff: management, professionals, sales, technical, etc. These categories are important, but not important for the explanation right now. Just as a cash flow statement tells us how cash moves through the organization, so the human capital flow statement tells you how your human capital is flowing through the organization. Back to the cricket analogy. This tells you in which overs the batsmen were out and how they went out. So the questions that this statement starts to answer for you is, how well are you retaining staff, in key categories especially? How well are you developing staff? Is the workforce growing or shrinking? What is the relationship between permanent and contingent staff? How are you reducing staff in the right areas? And how does this compare across business units? And even across, if these statements are public statements, you can compare with competitors in the same industry. The questions that you can ask using this information is limited only by your imagination and your own creativity. This is the human capital asset statement. As with a financial asset statement, the human capital asset statement is a snapshot at a specific time. It is in two parts, as it didn't fit easily onto one slide for this presentation. This first part tells you what your headcount is and what the cost of that headcount is at that specific time. This is the value of your workforce at that time. This can be compared year on year as it is above to identify trends, and it can also be compared between different business units. Referring again to our cricket analogy, this says South Africa is 67 for 5. Then you can compare that with the last time they played and against the same opponents to tell you if they're improving or not. This is the second part of the human capital asset statement and provides slightly different information. Firstly, the human capital return on investment ratio is a measure of the return to the business from each rand invested in human capital. Critical business roles and groups have a larger impact on business outcomes than other groups, and thus are weighted more heavily, while other group positions or groups have little or even negative impact on business results, and thus are weighted accordingly lower. Given the information above, in which groups would you look to invest, and which would you not? The human capital value add represents human capital productivity value added or returned from the workforce above its actual or direct cost, its marginal value add. In the example provided, you can see that the human capital value add has increased this year over the prior year. Workforce productivity impact represents the current and prior period incremental human capital productivity value add or retained value created from the workforce based on revenue per full-time equivalent, profit per full-time equivalent, and market value or market capitalization per full-time equivalent. Marginal metric productivity improvements. I know that sounds a lot, and it is a lot, but we'll leave that to the calculation. The total human capital value added is the human capital productivity value add or returned from the workforce above its actual cost, and it is the sum of the retained human capital value add and productivity impact. Just look at these last figures. What does this tell you? It lets you know that you're doing something right. But from this, as with the financial asset statement, you don't know what it is that you're doing right. So, move on to that. This is the impact statement, equivalent to the income statement, or uses information equivalent to income statement information. The impact statement uses common income statement information such as total revenue, total expenses, operating profit, etc., and relates this information to relevant human capital information to provide comparative measures of financial performance related to human capital, such as total cost of workforce as a percentage of revenue, total cost of workforce as a percentage of expenses, total cost of workforce as a percentage of operating expenses, profit per full-time equivalent, market capitalization per full-time equivalent. These produce the human capital return on investment, a measure of the return to the business from each rand invested in human capital. As we mentioned in the previous slide, critical business roles and groups have a larger impact on business outcomes than others, and thus are weighted more heavily, while other positions have little or even negative impact and are therefore weighted accordingly lower. The workforce productivity impact, the retained value created from the workforce based on revenue per full-time equivalent, profit per full-time equivalent, and market value per full-time equivalent marginal productivity improvements. And this ties back to the human capital asset statement. Now, let's look at these in real situations. If we take some of the figures from these statements and graph them, the figures can tell us some really interesting stories. On this graph, the size of the dot gives an indication of the number of people in that specific job family. So there are more sales staff than there are specialists, for instance. So if you were looking for places to invest your human capital, which would you choose to maximize the return on that investment? Clearly sales staff, professional staff, and moving down your service and operational staff before you start improving in management. These are actual figures taken from the published financial statements of 3 of our top financial institutions. Let's call them A, green, B, blue, and C, purple. And the colors have no other meaning. So let's see what's going on here. Taking these two left-hand graphs, what can you say about these financial institutions? Well, you can see that A and C have higher operating expenses. Then look at the two right-hand graphs. What can you say about them now? A is spending more wisely and getting more return from each rand spent, but B is getting a better return on their investment. Given this information, if you were an investor, which financial institution would you consider investing in? These three graphs measure the total cost of workforce against revenue, net operating profit, and against operating expenses. What do these graphs tell you about the same three financial institutions? How does this add to the knowledge that you had from the previous graphs? And which one now would you look at investing in? Is it the same, or have you changed your mind, knowing a bit more information? Part of the impact statement is the talent management impact. And this provides wonderful feedback to management on what is being effective and what is being less effective in the organization. This part of the system evaluates the different aspects of talent management and tells you the impact of each on organizational success. I'm not going to go through any of these in any detail. Most of the indices and measures are complex and require fairly substantial data and analysis beforehand. So this is a result rather than a calculation. The important thing is the measure of impact and understanding where to look to improve this. This slide covers talent management focus areas of recruiting, mobility, that is following a career path, having a career path and following a career path in the organization, and leadership and management. This slide includes the talent management focus areas of training, performance and engagement, and turnover and retention. As I mentioned, I'm not going to go into these in any details. They're just far too complex, and we don't have the time in a short session like this. However, I would like to draw your attention to the impact. The total impact of talent management practices for the current year is 39 million. And we can see that there's an improvement of 90.5%. This is the sum of the impacts of all talent management processes. If we are looking for where to make improvements, which is what this exercise is about, we need to look at the most successful practices and the least successful practices. Those are the ones with the greatest or smallest improvement year on year. From this slide we can see that training had the greatest improvement, greater than the average of 90.5, and we can see that performance and engagement really does need some improvement because that's bringing our overall score down. On the previous slide, we can see that leadership and management had the greatest improvement. Recruiting and hiring made a positive contribution, but mobility or career pathing is another thing that needs close attention. Can you see how you can use the data that you already have available to you to help you to focus on the areas that need most attention, to identify and focus, and give you the ability to see trends and performance year on year objectively. Now, let's look at some more fun stuff. This is called a workforce image map, or a WIM. Now, this is something that you can all do right now, back in your office, very easily with the information that you have available to you. The workforce image map compares headcount in numbers on the left with headcount cost on the right in the different job categories. I explained to you before, the job categories are important. Most organizations look to cut costs at the lower end, the laborers, service, etc., but this is small fry. This WIM tells us that if we want to cut costs, the best places to cut costs will be management and professionals. A small cut in that, a small reduction in number has a greater impact on cost. And we don't necessarily mean firing, we just mean doing things differently. We all expect that the higher the organizational level, the higher the cost. And this is where it becomes important that you know which of the job categories provides your high value add, because you don't want to cut your high value add jobs. And if you remember the bubble chart, management, high cost, but it was below the line in terms of value add. For this organization, managers and professionals are not high value add, so they could implement interventions, and in fact what this particular organization did was they increased span of control, so they increased the number of staff for the same number of managers without increasing management, and that had a tremendous improvement. Another thing is you can outsource your professional requirements. Let's look at it slightly differently. On this graph, the value add is on the bottom axis, and whether the job is core or not, or the job category is core or not, is on the left axis. So we're comparing jobs that are value add and jobs that are core. And obviously the most important categories to us are jobs that are both value add and core to the success of the organization. Some jobs are core in the organization and others are value add. The trick here is to identify those jobs that are both core and high value add, because that is where you'll get the greatest return on investment. So, from this graph, which jobs would you look to invest in? It is also useful to look at the WIM year on year. This WIM compares current year with prior year. Where do you think this organization has made its higher level of investment between the 2 years? And now let's have some fun. What can you say about these different organizations? What kind of organizations do you think each could be? For instance, have a look at E. What kind of organization would you think E is? It has a reasonable high level of senior management, a lot of professional staff, a few specialists and technicians, and then administrative staff. What kind of organization would have that kind of picture? Then look at A. A has a lot of professionals, but it has a lot of operational people, very few laborers, and almost no salespeople. What kind of organization could that be? Have a look at the others. See if you can guess what kind of organization these could be. And then map your own organization against these. See how you compare. So, what we've seen today, firstly, human capital analytics really is the last frontier of business intelligence. Secondly, it's about asking questions, analyzing the answers, and then asking more questions. We are so unused to doing this for our workforce, and it seems to be a foreign thing to do, but we really have to make it more part of our management practices and processes. And it's an iterative process. It's something that you keep on doing. The world changes around us, and we never know exactly how that is going to impact us. So we need to keep asking, analyzing, and implementing. Finally, you are able to make better decisions regarding your human capital by using a business intelligence tool such as these human capital financial statements, or the human capital return on investment calculator, or the workforce planning tools, all of which come from the Human Capital Management Institute. So to answer these questions, how can we model our workforce to optimize productivity and profitability? What is the marginal return on investment for every rand spent on human capital costs in our organization? Is there a correlation between manager effectiveness and workforce performance and retention? To help you answer those, contact us. We'd really love to work with you on that.